After the Fed's rate decrease yesterday, it's time to concentrate on the tech trade. For that reason, we'd like to welcome Dan Ives, Managing Director of Equity Research at Bush Securities, as our next guest. Dan, it's a pleasure to speak with you. As you know, we always enjoy having you on. I recently saw you at a conference, though I should clarify that I wasn't there. Still, let's talk. You seem to be enjoying yourself. Let's talk about the rate cut, specifically the 50 basis point. I'll admit that I was surprised by this as well. Were you expecting 50 bips, or were you in the 25 camp? In our opinion, this was going to be the Fed ripping the band-aid off. In terms of cutting 50 bips, I think was a huge first step to what's going to be just a massive dovish stance over the next 12 to 18 months. And for tech investors, that's a risk-on trade. It's bullish. That's why today, a lot of those bears that have been out for the last month, after few years in hibernation mode, they're going back into those caves this morning. It certainly seems that way. You've got markets hitting new all-time highs today. We're looking at the S&P 500 continuing to advance. Nasdaq 100 are really rallying today. How does this impact the AI trade in your view through the balance of the year? Oh, I think tech rips higher. Rest of the year. Look, first off, you have $1 trillion of AI-driven capbacks coming to tech over the next 3 years, and that fundamental story. And we just got back from Asia, and that's accelerating, not decelerating, so I think it shows demands as supply 15 to 1 tech AI names, I believe, rip higher into year-end. And I think going 2025 now, you're going to see more second, third derivatives of that trade, even small caps, starting to participate now. I continue to believe it's 900 p.m. in the AI party that goes to 4 a.m. So it goes to 4 a.m. We've heard the analogy before in terms of innings for the AI trade. Are we still in the early innings from your view? Because you had started to see some commentary about okay, things are maturing. Are we going to start to see the second case, the use case for AI? And that's kind of what investors were looking to hear more of. Okay, what's the use case now? Yeah. And that's what look at the messy of AI pounder. That's front and center in terms of the use cases. Use cases are exploding today. We have 4x the amount of use cases than we did going back called 4 or 5 months ago. That's why you're seeing the strength in ServiceNow, Oracle in the end. I think there will be strength in Salesforce and many other software brands because the software phase of AI is now beginning to play out. Let's talk a little bit about Nvidia. The company's shares are higher than I would have predicted today, especially in light of the significant risk on the tray. What does that tell you about Nvidia's position and, to some extent, what the haters have recently said about the company? After all, we recently returned from Asia, and demand is still growing. Nvidia and Gens, we think that the AI revolution is just getting started, and in a year, Nvidia will have a $4 trillion market capitalization. That's a cute, big statement to make, but what's the rationale behind Nvidia reaching that level? Look, you have $1 trillion in AI-driven capex, and they're the only company in town with numbers that we believe go up significantly higher. I think the streets are still underestimating what the ultimate demand looks like here. And as this all plays out, the stock isn't expensive. I also think that over the next 6 to 12 months, not only Nvidia, but the rest of the tech industry, we believe tech could rise by 25 to 30% over the next year. Can AMD catch up to Nvidia? Lisa Su, you never bet against T. They will be the clear winners in terms of chips. A lot of that we won't see probably for another 18 months. But I don't think a lot of that AI is being built into AMD. I believe AMD will benefit much, and this is a large enough ocean to accommodate more than 2 boats. We are witnessing a 1995 to 1996 moment, but this is not a 1999 to 1999 tech bubble moment, in my opinion, which is why many bears are returning to hibernation mode. However, you mentioned that the bears are returning to hibernation mode, so is this merely a passing phase? Some have expressed concern about a bubble, so why aren't you concerned about the spending? You see the use cases. I believe it's the biggest transformation we've seen in tech in the last 35-40 years. It is a 4th industrial revolution playing out. This is not hype, it is real. And I think we see that more and more with data points, whether it's Oracle Paler Service. Now we see it, but I believe Salesforce and others. This is just the start of this AI revolution. obviously being led by godfather of A. Jensen, Nvidia, Nadal, and Redmond, but it is not stop, it's not stopping. And also the bears have hated this rally for the last 2 years. And I think it's just going to be another painful year ahead for the bears. And then you said you were recently in Asia. What stood out to you about the potential for growth within tech and AI from your visit? Demands accelerating. I mean, we're seeing that across the whole supply chain, use cases exploding. You only have 3% of enterprise that have even gone down the AI path. We come back from Asia incrementally more bullish, not just on AI, the broader tech trade, including Apple, despite many yelling fire in the crowd theater this week. Are you in the camp that's expecting a super cycle for iPhones for Apple? Oh, this is an AI. If you look hooked up super cycle, you'd see iPhone 16. This is an AI-driven super cycle underway in Cupertino pre-orders. I believe in line with expectations. No one was expecting strong pre-orders. It's about entering the holiday season. I believe this will be Apple's strongest unit year ever. Alright, so I'm ready for a new iPhone. And that's a bullish sign when you upgrade. Dan, I'm so glad you're back with us. According to consensus forecasts, Q2 2025 earnings will be 68 cents, not your estimates, Dan. But we're at 74 cents for the upcoming quarter. 80 cents for the quarter that follows. Are you above this? Are you below this? And where are you in relation to the consensus? I mean, we believe that the run rate per quarter will be $25. In other words, you're going to start looking at our year when you look at 25 and 550 per share. In other words, that's really like if you're buying this stock, you're basically focused on $5 of earnings power like that. That's how I see it. And if you look at the annual run rate, because also you're looking at most investors that are in this game, and broader, you're looking like, okay, when RAM, what is num, what do true numbers look like when this is actually at scale, and $5 is really the number, the out that I think from a buy side or whisper. So that's why when you look at some of these, it's really focused on where this is going next 12, 18 months. That's why we talked about like Apple WBTC airs. Come out stocks 190, there's nothing here about. And it's 230 today, right 2.5 months later. So my whole point is like the initial knee-jerk on like some of these things. Sometimes like the story is I think lost in terms of what's actually happening, not just for Nvidia, but for broader tech in terms of that multiplier, the $1 to the $8 to $10 multiply, which I think is the most important thing for the broad attack. So on a $5 annual run rate, in terms of earnings power, you got 25 times, 25 times, where does that put the stock? I didn't major in math. And then you start to look at like 125, and then ultimately you're like, you start to actually 525 earnings, could you get to 150, 175? And I think the bull case getting to 150, 175, it's really like, okay, I'm looking at this next 2-3 years, this is a company that could have they have $6 of earnings power. As this all plays out, that's sort of, if you're longer term, that's bull case, as this all starts to play out.